Good afternoon, traders. This is Kevin Craney with RJO Futures with an afternoon and weekly roundup of the financial markets as we head into the weekend. What a role reversal. Really, the market's just skyrocketing today as we look at the equity markets. I think we see a lot of short covering rally and also a lot of optimism coming off of the European summit. If you remember earlier in the week, I had indicated that summit was long on hope and short on expectations, but there was some actual good news that came out of that summit. It looks like there was an agreement actually from the German Chancellor for more banking unity with more calling it federal oversight through the ECB. Channeling the money directly from the EFSF and the ESM possibly straight to the bank balance sheet rather than going through the sovereigns and increasing the debt to GDP ratio, along with other significant agreements. These are all positive things, but there are still a lot of unanswered questions. A lot of treaties have to be amended, things have to be ratified and go through parliaments and different governments, so there is a lot of different roadblocks that could come up along the way, and Chancellor Merkel is going to have a lot of explaining to do as well, because some of the things that were agreed upon were some things that she said she would never let happen. So what did she get in her end of the bargain in all of this as well? So it should be an interesting play for today. Really, though, the market's rallying. Again, equities trading much higher. The S&P up about 31 points to trade well over the 1350 mark, up around 1360. Still ending the quarter down marginally, but ending the month of June higher, up over a little bit over 3% for the month of June on the S&P. And we see the 10-year Treasury yield actually ticking higher as we see some of those funds flow out of Treasuries, albeit it was still within the trading range. We see the 10-year Treasury yield up at about 164 basis points. We see the 10-year futures right at the midpoint of their trading range, around the 133.20 level or so, 133.14 level. In 30 years, we see the 30-year yield at about 276 basis points, and the 30-year bond futures actually trading up around that 149 level or so. So still well within the range that it's been trading in here for the past several weeks. As we look forward to next week, it's the 4th of July holiday week, so trading volume is bound to be a little bit lighter with most markets closed on Wednesday, so a lot of traders away from their desks and screens on Monday and Tuesday, as well as Thursday and Friday. It doesn't stop the data flow. We have a lot of data flow out next week from here in the United States. We have manufacturing data, construction data on Monday and Tuesday, factory orders on Tuesday. Then we go into Thursday with a very heavy data volume. We have jobless claims, the ADP unemployment report, as well as various other reports. We actually have a 3-year note auction and a 10-year note auction on Thursday. Friday, we're looking at the all-employment and unemployment numbers as well. So it sets up for a big week next week for data flow out of the U.S. as well as data flow from the international markets too. All in all, it should be very interesting with light volume. Please give me a call, 888-596-5817. We can discuss these opportunities as well as other trading opportunities that come up. And always remember that futures trading is not for everyone. It does carry a high degree of risk. Enjoy your weekend, and we'll talk next week.